Happy Friday, everyone. Wanted to hop on here real quick and talk about the main differences between FHA and conventional. I did a pre-approval last night for a couple that were shopping some mortgage lenders, and the previous lender had pre-approved them for an FHA loan. That was not the best option for them, and I wanted to list a few reasons why. I'll get into more specifics and down payment options and percentages and amounts in future videos, but for now, I just wanted to cover a few things. First, FHA requires a 1.75 upfront mortgage insurance premium. This basically means on a $500,000 loan, HUD is going to tack on $8,750 to the back of it. It doesn't affect the payment, but you owe $9,000, almost $9,000 more than you borrowed. And that's partially refundable in the first 3 years if you refinance, but conventional doesn't require that. So the second, FHA has a fixed annual mortgage insurance premium, and it's a factor, it's 0.85 or 0.80, depending on the LTV, and higher balance loans are higher, and there's some other stuff. And it never goes away on a 30-year loan unless you refinance and do a conventional. A conventional annual insurance premium is based on your credit score and how much you put down, and I've seen it as low as 0.1%. The PMI eventually goes away once you get under 80% loan to value. Now, the good thing about FHA is government rates are slightly better than conventional rates, typically between like 0.25% and 0.5%. And FHA is not so FICO driven like conventional. So if you have a lower credit score, the mortgage insurance premium is probably going to be too high on the conventional loan anyway, so FHA would make more sense. If you have a really, really good credit score, like the couple last night, the PMI payment will far make up for the difference in interest rate. And it'll be much more affordable to go the conventional route. So it just depends. I know that was a lot to digest in such a short video. And like I said, I'll go into more detail of percentages and amounts and stuff like that in the future. But if you have any questions, feel free to call me at 805-660-4072. And next week is a big week. The CPI data comes out. That's what tracks inflation, the consumer price index. So that number should have, whether it's good or bad, it's supposed to be pretty good, should have a really big impact on overall markets. So I'll keep you posted on that as well. That's it. Have a great weekend. Again, call me if you have any questions, and I'll see you next week.